Hey, Matt Skinner here. I'm glad you decided to jumpstart your investment portfolio, and I'm about to show you how. But first, a little bit about me and my company. I'm going to give you a quick overview of the company and tell you a little bit about myself and how and why 12 Stone was founded. Then we'll jump right in and talk about making money. Sound good? 12 Stone was founded for the purpose of buying cash flowing apartment buildings and cash flowing self storage units. Our team of expert acquisition specialists comb our target markets for the best deals. We mostly go after off-market properties, and we like good buildings in great areas that have distressed sellers. Now let me show you how you can benefit. When we have a great deal under contract, we look to our investor partners who like to earn a great return on investment. We do all the work, the deal hunting, the offers, marketing, management, everything. We pay our investors a higher rate of return than they can typically find elsewhere. My goal is to buy cash-flowing properties with individual investors so that we can achieve the same buying power that's usually only reserved for larger institutions. I know that you'll be interested in seeing some of our deals, but before I can show you any specific offerings, you'll need to return an investor interest form. You can click on the link below now and begin filling it in as I continue with this brief overview presentation. A little bit about myself. I started construction working with my father way before they had child labor laws, and when I got old enough I followed in his footsteps as a builder and as a general contractor. I was buying junker houses, fixing them up, and selling them for an enormous profit, and I was having a lot of fun too. I was fortunate enough to open my doors at just the beginning of one of the biggest real estate and construction booms in our history. And I specialized on the cover of a well-known custom architectural magazine, and the cover of this even won some architectural awards. I've also developed commercial real estate like this 7-acre site you see here. And then I turned the company towards condominium and multifamily development. And as I like to say, I currently wrote 2 books on short selling, but mostly I'm a family man. I have a beautiful wife, Christina, a 2-year-old daughter, Charlotte, and my 1-year-old son, William Henry Skinner, named after his great-grandfather. When I'm not spending time with my family, I'm looking for strong, cash-flowing properties. There's a tremendous opportunity right now, and the timing is exactly right to be buying real estate. 12 Stone is set up to locate, negotiate, purchase, and manage every aspect of the properties we acquire, and we're always looking for new partners to get involved in our deals. We buy for cash flow in good areas. The National Association of Home Builders recently reported that there will soon be an apartment housing shortage because nothing new is being built, and few new starts are even being planned. This creates a huge opportunity for us as apartment owners. The way we buy them, apartment buildings provide us a higher rate of return, a steady income stream, and a hedge against inflation, not to mention a tremendous tax advantage. The reasons apartments will soon be in such high demand is because of the foreclosure phenomenon. More and more people are being driven into less expensive housing solutions. And at the same time, we've just begun having our largest generation of Americans turning age 24. The apartment age. 72 million Americans will reach the move out and get an apartment age in the next several years. I'm going to be happy to help them. We also like self-storage facilities, but we don't want too many people knowing our little secret. Self-storage is just like owning apartments, except there are no tenants. We are actively locating self-storage facilities, especially in the overall picture is this. U.S. real estate is on clearance sale. Our currency is intentionally being devalued in hopes to inflate us out of the downward spiral we saw over the last couple of years. All markets boom and bust. It's happened since the beginning of time. We saw a huge run-up during the early 2000s. We saw the big bust begin in late 2007, and I believe that most markets have hit bottom. We like LA, especially certain micro markets in and around the city. LA is the 3rd major city in job growth. We have a high migration pattern from all parts of the world. Everyone knows about the entertainment business here, but LA also has one of the busiest ports in the world, a very concentrated aerospace program, high tech, and even a fashion industry. Mostly, people just want to live here. We also like Phoenix, Arizona. When you can buy cash-flowing assets at far below replacement value, you've got to have a good thing, right? Plus, I believe Phoenix will continue to expand its population as more and more businesses take advantage of the business-friendly climate that Arizona provides. And then there's good old Texas. I love Texas. Texas, I think, is one of the last great hopes for our country. Texas, and specifically Austin, has a tremendous business climate for growth, and we love buying cash flowing assets in areas primed for growth. In general, we have the perfect storm: low prices, motivated sellers, low interest rates, and an exploding demand for multifamily housing. So what do we get ourselves into? We like buildings with 50 units or more, B and C class assets. We buy buildings only in the path of progress, and we like good properties in great areas that are primed for a better upside. The first step in this process is to identify the properties that qualify, and then to sift through and find the right sellers. Once we're talking about the right property with the right seller, we can then work on the right terms. Once we're talking about the right property with the right seller, then we can work on the right terms. For our portfolio, we're buying deals that meet our conservative criteria. We look for at least an 18% annualized return. We look for an 8% first-year cash-on-cash return. We're always looking for properties with some kind of value-add component, and we typically plan to hold these assets for 5 to 7 years. Let me talk to you about a sample deal. If you invested $100,000, you'd get almost $1,100 each month in and month out. Show me one of your CDs or stock accounts that has that kind of cash dividend. When we catch our fish, we invite one or more of our investor partners to join with us in the purchase of the building. We put together a new limited liability company and issue shares to our investor partners. Because of our acquisition strategy, our partners receive immediate cash flow, a share in the equity, participation in the appreciation, and the tax advantages. We locate the property and we do our due diligence. We package the property for your review. You decide if it's a good fit for you or not, and we collect funds and close. If you're looking for a more secure method for asset preservation, a higher rate of return than you can typically find elsewhere, and a huge growth opportunity, then you've found the right team, and I look forward to expanding our financial future together. Download it now and get started on your path to financial freedom.